Assalamu alaikum everyone. We'll continue with the same chapter today, that is chapter 5th, Rural Development in India. As we have seen in the previous lecture, the concept of rural development and what are the significance of rural development in India, how it is important for the economic growth and development of the nation. So continuing that, we'll study how we can contribute or we can increase the process of rural development in our slum areas or villages, that is how we can aid or help the rural development. So one of the very important concept or criteria for rural development is agricultural credit. What is agricultural credit? Agricultural credit is an important prerequisite for agricultural growth. Agricultural policies have been reviewed from time to time to provide enough and timely finance to the rural sector. Rural credit system assumes importance because for most of the Indian rural families, savings are inadequate to finance the farming and other economic activities. To overcome this problem, agricultural credit is provided to farmers, artisans, and other landless laborers, which contribute to the rural development in general. Agricultural credit is the finance that is made available to the farmers for agriculture activities, for transformation of agriculture and so on. So there are different types of agriculture credit based on different criterias. So we'll study the types of agriculture credit. It can be classified on the basis of tenure and on the basis of purpose. So on the basis of tenure, it is a credit requirement based on the time period of loans. There are three types of agriculture credit based on tenure: short-term credit, medium-term credit, and long-term credit. Short-term credit refers to loans not exceeding 2 years. It is required for meeting the short-term requirements of the cultivators, farmers. For example, loans required for the purchase of fertilizers, high-yielding variety of crops, for meeting the expenses on religious or social ceremonies, and so on. Medium-term credit refers to the loans that are for a period up to 5 years. These are the financial requirements to make improvements on land, for buying the cattle or agriculture equipments, for digging up the canals and so on. So the amount here is slightly higher than the short-term credit. And the last type of agriculture credit based on tenure is long-term credit. Long-term credit are the loans which are for a period of more than 5 years and are generally required to buy tractors for making permanent improvement on lands, for irrigation facilities. The amount here is large as compared to short-term and medium-term credit, and also the tenure or the term is also more than short and medium-term credits. Another type of agriculture credit is based on purpose. The agriculture credit on the basis of purpose for which the credit is used can be of two types: productive and unproductive. Productive credit or productive loans are the loans that are related to agricultural production and economically justified. For example, purchase of tractor, land, seeds, all this is required for agriculture purpose, and therefore these are productive in nature. Therefore they are called as productive loans or productive credit. Unproductive credit, on the other hand, is used for personal consumption and unrelated to productive activity. For example, loans for the expenditure on marriages, religious ceremonies, and so on. So, unproductive loans are those loans which are not used for agriculture activities directly, rather, it is used by the farmers for their personal expenses. So, these are the two types of agriculture credit based on tenure and based on purpose. So, we have seen the types of agriculture credit. Now, we'll see or study the sources of agriculture credit in India. So the first one is the non-institutional sources. Non-institutional finance forms an important source of rural credit in India, constituting about 40% of the total credit in India. The interest charged by non-institutional lenders is usually very high. The land or other assets are kept as collateral, security, or mortgage. So, the important sources of non institutional credit are money lenders and other private sources. Money lenders or money lending has been a widely prevalent profession in the rural areas. The money lenders charge huge rate of interest and mortgage the property for the cultivators. Other private sources include traders, landlords, commission agents, or credit from relatives, friends, and so on. Another source of agriculture credit in India are the institutional sources. The general policy on agriculture credit has been one of progressive institutionalization aimed at providing timely and adequate credit to farmers for increasing their agriculture production and productivity. Institutional sources aims to provide quick and easy finance to the farmers, providing better access to institutional credit for small and marginal farmers and other weaker sections, enable them to adopt modern technology and improved agricultural practices as a part of the rural development, and it has been a major part of the policy of rural development. There are different institutional sources in India that provides agricultural credit, the first one being NABARD, National Bank for Agriculture and Rural Development. It is the apex banking institution to provide finance for agriculture and rural development. National Bank for Agriculture and Rural Development, NABARD, was established on 12th of July 1982 with a paid up capital of rupees 100 crores by 50-50 contribution of Government of India and Reserve Bank of India. NABARD is an apex institution in rural credit structure for providing credit for promotion of agriculture, small-scale industries, cottage and village industries, handicrafts, and so on. The paid-up capital stood at 10,580 crores as on 31st March 2018. Consequent to the revision in the composition of share capital between Government of India and RBI, NABARD today is fully owned by Government of India. So it's a government institution that provides agricultural credit. So the next type of institutional source includes rural cooperative credit institutions. The rural credit cooperatives may be further divided into short-term credit cooperatives and long-term credit cooperatives. Short-term credit cooperatives provides short-term rural credit and are based on a three-tier structure that includes primary agriculture credit societies, district central cooperative banks, and state cooperative banks. Long-term credit cooperatives meet long-term credit requirements of the farmers and are organized at two levels: primary cooperative agriculture and rural development banks. These are at village level as an independent unit, and state cooperative agriculture and rural development banks. These banks operate at state level through their branches in different villages. So these banks are another type of institutional sources that provide agricultural credit to the farmers. Commercial banks. Commercial banks provide rural credit by establishing their branches in the rural areas. They often come up with different loans and other facilities or credit at subsidized rate to encourage the farmers to take loan and improve their agricultural facilities. So commercial banks are another important part of institutional sources that provide agricultural credit. Regional rural banks are the specialized banks established under RRB Act 1976 to cater to the needs of rural poor people. Regional rural banks are set up as rural oriented commercial banks with the low cost profile of cooperatives but with the professional discipline and modern outlook of commercial banks. So these type of banks perform both the functions of rural bank and commercial banks. So it provides them financial aid as well as helps them to develop or adopt a better facilities of agriculture so that rural development is achieved at a faster pace. Microfinance institutions are another important part of institutional sources. Banks offer concessional interest rates for rural credit. However, small farmers are unable to access them because of borrower unfriendly products and procedures. Inflexibility and delay and high transaction cost, both legitimate and illegal. Therefore, non-government organizations are providing alternative means to enhance the access to credit by poor since the mid-70s. So these microfinance institutions are nothing but NGOs that provide easy and quick finance to the farmers, those who cannot afford or are not capable to go to the banks for financial aid. So finance institutions or NGOs provide agriculture credit to those farmers and thereby contribute to the rural development. So we have studied all about agriculture credit in this lecture, and with this we have completed our chapter 5th, that is rural development in India. That's all for today's lecture. Thank you.